Hi, my name is Munya Duvera, business consultant in Johannesburg, and today I want to speak to you about the futures market, also known as the futures exchange. Essentially, the futures market is a market whereby future contracts are agreed upon by buyer and seller for a specific quantity of a commodity or financial instrument for a specific price, only to be delivered on a specific time and date in the future. For an example, if I was to go onto the foreign exchange to buy $100, I could use a futures derivative. Remember, futures are derivatives. I could use a futures derivatives to make purchase of that $100. I would say to the seller, I want $100, but I only want it in 2 months' time, and I'm willing to pay a specific amount of money for it. The seller would say to me, okay, Munya, I will give you $100 in 2 months' time for X amount of rands. Therefore, me and the seller have agreed on the sale and purchase of $100 only to be delivered and executed in 2 months' time. Evidently, one of us will gain and one of us will make a loss, because regardless of the exchange rate in 2 months' time, we agreed today that I will pay him X amount of rands and he will give me $100. Therefore, futures are a useful tool to hedge against exchange rate. Companies use them, especially import and export companies use the futures market to hedge against exchange rates, and it's a very useful tool. And one last thing, future markets are in contrast to the spot market. Spot market is where trades or contracts are executed immediately. If I was to buy that $100 in a spot market, the transaction would be done right now, and the 100 rand and whatever the exchange rate and the rands I would pay will be done immediately. I'm Munya Duvera, management consultant in Johannesburg. Send me an email, give me a call. My contact details are on my website, munyaduvera.co.za. Follow me on Twitter, Instagram, Facebook, LinkedIn, @Munya Duvera. Let's talk.